Let's talk about the market performance. Year to date, 5.73%, strong volumes. Give me your take. How long do you think this general positive trend or this bullish sentiment will take in terms of how we're seeing the markets performing this year? How long do you think it will hold? That's my question.
Uche, looking at history, from about 2010 to 2012, the market on average in the month of January has posted at about 8%. It posted 8% in 2010, posted 8% in 2011. Now, the reason why it posted 0.7% last year, and we all know that was because of the strike, the Occupy Nigeria incidents that we had in the beginning of the year. So the market is still on course to post the 8%. We are of the opinion that it will likely post 8% this month.
Right,
also.
so definitely performing better than we saw during the same period
last year. Yes, definitely.
And I think that's quite positive. But let's talk about some of the events going on the NSE. And we heard yesterday they're unveiling 6 new fixed income market makers, and I'd like to get your take on this and what you think this means for liquidity on the bourse and certainly that fixed income market.
Well, basically it would enhance it. It would enhance it. It's a positive development. Our market is shifting away from being almost monoproduct in terms of being equity. So for the first time in quite a while, it allows investors, small-scale investors, to invest directly in the fixed income markets. Now, you're basically looking at liquidity. Obviously, it would enhance liquidity. It would obviously enhance turnover. So it makes your market more attractive for even the small-scale investors who are looking at investing in that fixed income space, but have not had the opportunities to.
And right, I think, Boyega, a lot going for the markets this year. We heard, events coming out with the PFA. We're hearing that the PENCOM released amended investment guidelines for PFAs.
Yes, they did.
And, with this new multi-fund structure, I'd like to get your take. How do you think this will bear on the equity markets? I know PFAs generally like to invest in the fixed income market because they feel it's safer. Now, with this new multi-fund structure, do you think we're going to see changes in terms of their appetite for the equity market?
Yeah, we actually should. The investments in the equities market would also be driven by the fact that we expect returns in the money market this year to trend downwards. Why so? Inflation figures are likely going to come out next week. And we expect that if there's a drop in inflation, obviously we expect within the next 3 to 6 months a drop in NPR. A drop in NPR obviously will compress fixed income yields. As we are speaking, fixed income yields have all, with the exception of maybe yields on the 2030 bond, have all dropped to below 12%. That's below NPR as we speak. So we expect greater compression in that fixed income space. And obviously PFAs will look at it and say, you know what, since I'm not getting the type of returns I'm looking at in the fixed income space, I have to invest in equities. So we expect to see greater inflows into the equities market. Now, in reference to the structure, we know that PFAs had limitations of about a maximum of about 25%, but a lot of them were investing a lot lower than that. Now, because of the performance of the equities market last year, we've actually started seeing renewed interest, greater interest by the PFAs in the equity market space this year. So we're obviously certain that this year we're likely going to see more activities on the local side. In terms of participation, we've also seen a situation where from 80-20, where it was 80 in favor of foreign portfolio investors to local in 2011, it should have declined to about 70-30 this year. We expect it to be a bit more even this year.
Right. Well, I mean, let's focus on what's going on in the market currently. Looking at the banking sector, suddenly it's been the big star, performing quite well. We're seeing tier 2 banks. A lot of interest in tier 2 banks. Tier 1 banks, not so much. In fact, investors seem quite cautious on these stocks. Give me your take. Why are investors cautious on these stocks?
Well, for the tier 1 banks, what I think it's largely a case of we've seen valuations, we've seen securities within that space valued almost appropriately. So for the institutional investor, he's looking at it and saying, what's the upside in terms of capital appreciation? Now, if they don't see significant upside in that space, then they're likely going to look and say, okay, the tier 2 banks are better placed in terms of capital appreciation. They all have posted significant appreciation in terms of profitability. So you expect the tier 2 banks also to do well, and they have greater upside potential.
Right, okay. Well, looking at the building and materials sector, I think that's another sector that has been performing quite well, at least towards the end of last year. But I will mention we did have some news coming out towards the end of last year. There's a glut in the cement sector. Wondered how that was going to bear on the cement sector this year. Dangote Cement seems to be still performing quite well. In fact, yesterday was on the buy side.
It was up.
It was actually up. So, I mean, what's your take, on how investors are looking at this sector?
For most of late last year and early this year, there was a lot of news that there was a glut in the cement sector. Now, basic economics would tell us that a glut presupposes that there's excess supply, and that puts pressure on prices, and prices would obviously decline. Now, we didn't see any price declines. What we would attribute the reduction in demand to would be the flooding. Typically, construction activity slows down in the rainy season. Now, you have a combination of construction slowing down in the rainy season, then you have flooding also. So obviously that significantly impacted sales. Quarter 3 sales of Dangote Cement were down by about 16%. Quarter 3 sales for WAPCO were flat. So I don't really believe it's a case of that there was a glut, because what they claimed was the glut was caused by importation of cement into the country. As at 2005, importation of cement to the country accounted for over 70% of the cement in Nigeria. Right. As we speak, it accounts for less than 20. As at 2011, it was less than 30. As we speak, it accounts for less than, because there's only one importer of cement in the country as we speak, and he's been allowed to import a maximum of about 1.5%. Now, total cement capacity for the industry is in excess of about 28 million metric tons. So that's just slightly more than 5%. So I don't really believe that the glut was caused by importation. I believe it was a slackening of demand that basically caused it. And we've seen a situation whereby the securities in that sector were initially punished, but they've all rebounded.
Yeah, well, Boyega, I mean, we're actually running out of time here. So, I mean, very quickly, outlook for the market, do you think we'll hit the 30,000 level?
This week, no. Before the end of the month, yes.